Greetings, ladies and gentlemen, and welcome to the Advanced Public Financial Management learning session. We are still on the introductory chapter, and today we're going to study the challenges affecting the implementation of public finances. By the end of this lesson, you should be able to explain challenges affecting implementation of public finances. Number one, the first challenge is in relation to political will or political championship, what we call government leadership and ownership. One, government leadership and ownership. How is it a challenge? Now, the lack of political championship at the highest level has been a major reason for the fragmentation of public finances and the failure of the public financial management reform strategy to serve as a guiding document in the implementation of the overall public financial management reforms. And candidates reforms have in the recent past proved to be successful in Kenya in the PFM areas where there was strong leadership and ownership of the reforms. All right? Like in areas to do with the revenue administration, the payroll and pension management. There has also been reforms in debt management, the internal audit, the external audit, and legislative oversight. And in the recent past, we can cite a very prominent example of importance of political leadership, which is the IFMIS, which had not worked as well as had been envisaged. The Minister of Finance then announced what we call IFMIS reengineering to the top, to be a top priority. And much progress has since been made in implementing it. And in the past, candidates, while senior management may appear genuinely interested and committed to developing a PFM strategy, responsibilities in practice are often delegated to the subordinate staff, which results in reduced effectiveness of the process. And therefore, government leadership and ownership has been one of the major challenges affecting implementation of public finances. Number two, coordination. Coordination. Now, this could be coordination across the government, across the county governments, coordination across the various departments, and so on. And that poses a risk as beyond operational coordination, candidates beyond operational coordination, coordination at high political and technical level may be lacking. There could be coordination at operational level, but if coordination is lacking at the high political and technical level, then that could be a challenge affecting implementation of public finances. And public finance strategy seems to be deficient in terms of integrating various stakeholders at various levels into the PFM process and clearly delineating their role and responsibilities in the rolling out of reforms from the Ministry of Finance or the National Treasury to other ministries or departments or or agencies, and also the lower levels of government. So lack of coordination at this level, at all these levels, could be one of the hindrances, because candidates for a PFM system to work or to be effective, then the various stakeholders must coordinate to achieve the objectives of a public financial management system. So, and therefore candidates, the development of the strategy may seem to have been very inclusive and participatory, that is development. But when it comes to the coordination at the implementation level, when coordination lacks at the implementation level, then that could impede the implementation of the public finances. 3, high turnover rate. Okay, high turnover rate of accounting officers. High turnover rate of accounting officers could also be another challenge affecting implementation of public finances. As every new director general may introduce new strategies and plans, so frequent changes in heads of department may subject a department to a process of frequent change. And this problem is exacerbated when there is no proper handing over and taking over procedure. That could lead to turnover rate. It leads to turnover, the turnover rate not ensuring continuity of office and accountability of public finance in the interest of good governance. So where we have accounting officers changing jobs, leaving jobs, then that affects the implementation of the public finances. High turnover rate of accounting officers. Number 4, failure to implement parliamentary committees' reports. Failure to implement parliamentary committees' reports and revolving membership of public accounts committees. This also is a factor affecting implementation. The effectiveness of legislature may be hampered by the fact that members of the legislature are junior members of the party, while the executive is normally chosen from the senior members of the ruling party. For example, the cabinet secretary is always a senior member. In most cases, cabinet secretary is a senior member of the executive. And that very fact of the cabinet secretary being a senior member of the executive, that may pose a problem for the legislature in holding the executive accountable. All right? So we all know that the membership of Public Accounts Committee, these are the members majorly come from the largest opposition party. But the cabinet secretary, for instance, of the ruling party could be a senior member. So that could be another reason. The revolving membership of the accounts committee could hamper the effectiveness in the implementation of public finances. The is also a tendency of failure on the part of the executive not to implement the parliamentary committee's reports, and that also is a challenge. 5, unpredictability in revenues. Unpredictability in revenues is another challenge. And candidates' revenue in form of specific grants from, say, line ministries is always subject to uncertainty, in that decisions on such allocations appear to be taken on an ad hoc basis during the course of each financial year, depending on the overall availability of finance, and that affects implementation of public finances. The 6th challenge is the limited coverage of financial reporting. The limited coverage of financial reporting and financial audits. Limited coverage. Now, candidates, the focus of financial reporting seems to have been mainly on activities which are under direct control of the central administration, at least until the introduction of what we call a single treasury account through which all revenue and expenditure passes. And in a situation where budget users, for example, schools, libraries, museums, and similar institutions have retained separate bank accounts, reporting and audits over only payments made to such institutions by the government are not their final expenditure. Budgets may also be a challenge. So budget users' own revenues are excluded from budgets, although they are covered by financial reporting or financial reports. So budget users are subject to audit only occasionally, rather yearly as part of the audit. And that is a challenge affecting implementation of public finances. Number 7, absence of overview of fiscal risks. Absence of overview of fiscal risks. Now, candidates, important elements of the responsibilities of government are usually undertaken by enterprises established by the government. And the government remains liable for the consequences of a breakdown in the services provided by the enterprises they own, as well as for the payment of previous borrowing by such enterprises. And that could also be a challenge affecting implementation of public finances, the absence of overview of fiscal risks. We are talking about things like infrastructure maintenance, provision of utility services, which are actually undertaken by enterprises established by the government. Number 8 is the absence of effective middle term or medium term fiscal planning. Absence of effective medium term planning. The absence of effective medium term fiscal planning. This is fiscal planning. Absence. Now, it may be expected that public services will be delivered most efficiently if the resources and facilities required are planned over a period of several years. And investments can then be implemented economically, and staff and other resources needed for the ongoing provision of services once new investments have been completed and can be clearly identified. But in most cases, the unpredictability of revenues makes such planning very difficult, if not impossible. A relatively higher proportion of budgets is spent on capital expenditure, and the consequence of revenue unpredictability is that budget adjustments tend to concentrate on capital programs where changes can be made without immediate disruption of services or obligations to employees. So the absence of effective medium-term planning, which may be occasioned by the unpredictability of revenues, is a challenge affecting implementation of public finances. That is challenge number 8. Let's move on to challenge number 9. Absence of internal audit. Now, given that resources are not available for the Office of the Auditor General to carry out full audit of every government unit annually, it is particularly important that sufficient capacities for internal audits be available in every government unit with a significant responsibility for the provision of public services. So the absence of internal audit function within each and every government unit poses a challenge in implementing public finances. We all know that the Auditor General may not have the time, may not have the resources to conduct full audit of all public entities. And therefore, to help in the area of audit, every government unit should at least have an internal audit within an internal audit function. Then lastly, non-application of International Public Accounting Standards, IPSAS. Non-application of the International Public Sector Accounting Standards. Now, although consistent standards are applied from year to year, financial reports conform neither to the cash-based IPSAS nor to accrual-based standards, which would require full balance sheets and provision for depreciation of assets. So non-application of the International Public Sector Accounting Standards is another challenge affecting implementation of public finances. And that will mark the end of today's lesson, where we sought to discuss the challenges affecting implementation of public finances. And the objective of this lesson is that by the end of the lesson, you should be able to explain the challenges affecting implementation of public finances. Number 1 is government leadership and ownership, lack of government leadership, lack of coordination across the government. There is a high turnover rate of accounting officers. It's also a challenge. Failure to implement parliamentary committees' reports is another challenge. Unpredictability in revenues, a big challenge. Number 6, limited coverage of financial reporting and audits, limited coverage. Then number 7, absence of overview of fiscal risks. Number 8, absence of effective medium-term fiscal planning. All right. Number 9, absence of internal audit in government units. Then number 10, non-application of international public sector accounting standards. I'm going to give you one question before we close the lesson. Here is your assignment. Explain 10 challenges affecting the implementation of public finances. Thank you for attending our today's lesson. I hope to meet you in our next session where we continue to share knowledge in public finance. Bye-bye.